Welcome back to the channel, everyone. I hope you're having an amazing day. If you're passionate about the stock market, artificial intelligence, semiconductor companies, and discovering the biggest opportunities before the rest of Wall Street catches on, then you're in the right place. In today's video, we're taking a closer look at Micron technology, better known by its ticker symbol MU. Despite being one of the world's leading memory chip manufacturers and a major player in the rapidly expanding AI industry, Micron stock experienced notable selling pressure in the latest pre-market session. We'll break down exactly what happened, what the technical indicators are signaling, where the important support and resistance levels are located, and what Wall Street analysts continue to expect from this semiconductor giant. Make sure you watch until the end because the technical picture and analyst price targets tell two very different stories, and understanding both could be extremely important for investors following Micron right now. This video is for educational and informational purposes only. Nothing discussed in this video should be considered financial or investment advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions, because every investor has different financial goals and risk tolerance. Let's begin with what happened during Thursday's pre-market trading session. Micron technology shares came under noticeable pressure, falling nearly 4% before the opening bell. The decline wasn't caused by company-specific news alone. Instead, it occurred as broader weakness spread across the semiconductor sector, while technology stocks faced increased selling pressure. Investors also reacted to weaker NASDAQ futures, which were down approximately 0.45%, creating a cautious atmosphere for high-growth technology companies. At the same time, the broader market remained relatively stable, with S&P 500 futures edging higher by around 0.15%. This divergence between the NASDAQ and the S&P 500 highlighted the fact that selling pressure was concentrated primarily in technology and semiconductor names rather than the overall market. During pre-market trading, Micron changed hands around $861.43 per share. Although this represented a meaningful decline for the day, it's important to place that number into a broader technical context instead of focusing only on the short-term move. Looking at the moving averages, the stock was trading approximately 5.1% below its 20-day simple moving average of 898.86. This tells us that short-term momentum has weakened compared to recent weeks. Furthermore, Micron remained roughly 12.3% below its 50-day simple moving average of 972.25 cents, suggesting that intermediate-term momentum has also cooled significantly after the stock's previous rally hunter. However, the longer-term picture still looks much healthier than the recent weakness might suggest. Even after Thursday's decline, Micron continued to trade approximately 14.4% above its 100-day simple moving average of $745.63. More impressively, the stock remained nearly 61.5% above its 200-day simple moving average of $528.27. These longer-term moving averages indicate that despite recent selling pressure and short-term volatility, the company's broader trend has not been completely broken. Long-term investors often pay close attention to the 200-day moving average because it serves as one of the strongest indicators of a stock's overall health. As long as Micron continues trading comfortably above this major trend line, many market participants may still consider the longer-term uptrend to be intact. Momentum indicators also provide valuable insight into what investors should expect over the coming sessions. One of the most closely watched technical indicators is the Relative Strength Index, commonly known as the RSI. Currently, Micron's RSI stands at approximately 49.6. This is an extremely important reading because it places the stock almost exactly in neutral territory. An RSI above 70 typically suggests that a stock has become overbought and could be vulnerable to profit-taking, while an RSI below 30 often signals oversold conditions that may attract bargain hunters. Micron's reading near 49 indicates neither extreme is currently present. In simple terms, the RSI tells us that Micron is no longer experiencing the strong buying momentum that pushed shares higher earlier in the year. But it also isn't suffering from panic selling. Instead, the stock appears to be entering a consolidation phase where buyers and sellers are competing for control. Consolidation periods often occur after significant rallies and can allow a stock to build a stronger foundation before making its next major move. Whether that move ultimately turns out to be higher or lower will depend on future earnings, AI demand, memory pricing trends, and overall market sentiment. The moving average structure also reinforces this cautious short-term outlook. One of the technical signals currently attracting attention is the relationship between the 20-day and 50-day simple moving averages. At the moment, the 20-day moving average remains below the 50-day moving average. This configuration is generally viewed as a bearish crossover because it reflects weaker short-term momentum relative to the intermediate trend. When this pattern develops, it can often limit the strength of short-term rallies as traders become more cautious and sellers use rebounds as opportunities to lock in profits. Although the bearish crossover between the 20-day and 50-day moving averages deserves attention, investors should avoid looking at only one technical indicator in isolation. The broader technical picture still offers reasons for optimism. One of the most encouraging signals is that the 50-day simple moving average continues to remain well above the 200-day simple moving average. This is generally considered a bullish long-term trend structure because it shows that despite recent weakness, the stock has not completely lost its upward trajectory. In other words, Micron may be experiencing a healthy correction within a larger uptrend rather than the beginning of a major long-term decline. This distinction is extremely important because many institutional investors focus more on the long-term trend than on short-term price fluctuations. Now let's discuss the key price levels that traders and investors should keep on their watch lists over the coming trading sessions. Technical support and resistance levels often act as psychological barriers where buying or selling activity tends to increase, making them critical areas for anyone following Micron technology. Starting with resistance, the first major level sits around $1,012. This area is especially significant because it aligns closely with the recent trend zone where previous rallies began losing momentum. If Micron attempts another recovery, many traders may choose to lock in profits near this level, creating additional selling pressure. A decisive breakout above this resistance would likely require strong buying volume, positive semiconductor industry news, or another major catalyst related to artificial intelligence demand. Until that happens, the $1,012 region could remain a difficult barrier for the stock to overcome. On the downside, the most important support level currently sits around $804. This price zone has previously attracted buyers, making it an area where demand has already proven to be relatively strong. If Micron declines toward this level again, investors will be closely watching to see whether buyers once again step in to defend the stock. A successful defense of the $804 support could restore investor confidence and potentially trigger another rebound. However, if the stock breaks convincingly below this support with heavy trading volume, it could signal that bearish momentum is strengthening and that additional downside may follow in the near term. When analyzing these support and resistance levels together, the picture becomes much clearer. Micron is currently trading between a strong demand zone near $804 and a significant resistance area around $1,012. Until either of these levels is broken convincingly, the stock may continue moving sideways as buyers and sellers battle for control. This type of price action is common during consolidation periods and often precedes a larger directional move. Now let's shift our attention to Wall Street because analyst sentiment continues to paint a much more optimistic picture than the recent price action might suggest. While short-term traders have become increasingly cautious due to recent weakness, several major investment firms continue to express confidence in Micron's long-term growth potential. One of the strongest endorsements came on July 14th when analysts maintained their overweight rating on Micron technology while significantly increasing their price target to $1,750 per share. Maintaining an overweight rating generally indicates that analysts expect the stock to outperform the broader market over time. Raising the price target at the same time suggests growing confidence in Micron's future earnings potential, particularly as demand for advanced memory chips continues to expand across artificial intelligence, cloud computing, enterprise data centers, and high-performance computing markets. Another bullish signal came from Cantor Fitzgerald, which has remained consistently positive on Micron. On June 29th, the firm maintained its overweight rating while raising its price target even further to an impressive $2,000 per share. Such an aggressive target reflects the belief that Micron could benefit enormously from the long-term AI infrastructure boom. As artificial intelligence models become larger and more powerful, the need for high-bandwidth memory and advanced DRAM solutions continues to increase, placing companies like Micron in a favorable competitive position. Interestingly, Cantor Fitzgerald had already demonstrated confidence in the company just a few days earlier. On June 25th, the firm once again reiterated its overweight rating with a $1,500 price target. The progression from $1,500 to $2,000 within a matter of days highlights how quickly analyst expectations have evolved as demand for AI-related semiconductor products continues to strengthen. While price targets are never guarantees, multiple bullish revisions from respected Wall Street firms often indicate that analysts see meaningful long-term opportunities despite short-term market volatility. This difference between technical weakness and analyst optimism creates one of the most interesting situations for investors. On one hand, the charts clearly show that Micron is facing short-term pressure, with the stock trading below both its 20-day and 50-day moving averages, while momentum remains neutral. On the other hand, analysts continue to project substantial upside based on the company's long-term fundamentals, AI-driven demand, and strategic position within the global semiconductor industry. Ultimately, the coming weeks could prove extremely important for Micron Technology. Investors will be watching closely to see whether the stock can successfully defend the $804 support level, regain momentum above the shorter-term moving averages, and eventually challenge the important resistance zone near $1,012. At the same time, broader market conditions, NASDAQ performance, semiconductor sector sentiment, and continued AI investment trends will likely play major roles in determining Micron's next significant move. That wraps up today's Micron Technology analysis. If you enjoyed this breakdown and found it helpful, make sure to smash that like button, subscribe to the channel, and turn on the notification bell so you never miss our latest updates on AI stocks, semiconductor companies, and the biggest opportunities in the market. Thank you so much for watching, and I'll see you in the next video.